The Reserve Bank says it's ready to cut interest rates for the first time this year. The RBA board argues there's a case for lower rates because of disappointing economic growth. Here's finance correspondent Philip Lasker.
As ANZ Chief Mike Smith pushes interest rates up in one direction, moving in the other direction is Reserve Bank Governor Glenn Stevens.
I'm confident that we will see a rate cut at the Reserve Bank Board's next meeting on the 1st of May.
This month's board minutes observed that economic growth was weaker than expected despite last year's interest rate cuts.
The pass-through from the mining boom to the rest of the economy, if you like, isn't happening as much as they thought it might.
The board says a case could be made for a further easing of monetary policy or interest rates if the weaker economy means inflation is under control. So next week's inflation numbers are crucial for the bank's interest rate decision.
I think they will get what they want.
And for the first time, the RBA cast doubt on the resilient jobs numbers.
Steadiness of the unemployment rate has masked a somewhat softer labour market than they'd previously been prepared to admit.
It all helps clear the way for a rate cut. Inflation and weaker economic growth weren't the only factors cited as influencing the interest rate outlook. There was also a rare reference to the prospect of tight government budgets over the next few years. But whatever the RBA does, major lenders aren't expected to pass it all on to borrowers.
I think that increases the odds of another move in June or July.
As long as the central bank's inflation fighters don't have a reason to worry. Philip Lasker, ABC News.